Hi, everyone. This is Kira from Loans Canada. I'm here with our founder and president, Scott Satov, and our guest, Gary Schwartz, president of the Canadian Lenders Association. Thanks for joining us, Gary.
Hey, thanks for having me.
Could you tell us a little bit about yourself and the Canadian Lenders Association?
Yeah, sure. We represent fintech, essentially, innovation in the sector. And, we've obviously attracted the whole ecosystem around us. And we represent not only what traditionally was called, alternative versus incumbent, but we represent the whole sector now, because ultimately the financial services sector is changing, and we're part of that change. So we don't only impact, fintech forward, organizations, but we're also working with the incumbent banks and credit unions, to drive innovation right across the sector. Because at the end of the day, we're servicing Canadians and Canadians who need access to capital, and they fit somewhere in these credit bands, these risk bands, right across the ecosystem, and that's the ecosystem that we service.
Of course, thanks. And Scott, so for those of us watching who might not know, can you introduce Loans Canada just a little bit?
Sure. Thanks, Kira. Hey, Gary. Loans Canada is the original loans comparison site operating in Canada since 2012. We noticed that there was a lot of Canadians who were looking online for personal loans. And today we offer credit education. We offer great content, all sorts of tools. We offer a lender database so Canadians can make smarter decisions on loans and credit products, search, and enjoy our content.
Awesome. So we're here today to talk about open banking, which is finally on its way in Canada. It's been on the government's radar for a few years, though. So I'm just wondering, Gary, what's your opinion on why there's been maybe some hesitance or why it's taken so long to move forward?
Open banking is a sort of a large and sometimes unnaturally difficult theme to discuss, because it involves so many different stakeholders. Ultimately, all you're talking about is having a free flow of information so that we can be a borrower-centric economy. That's really what it comes down to. So that if you're working, if you're a customer of a bank, for example, and you need that data to flow freely so that you can get access to other services in the marketplace. You want to have the data that you own to be accessible by other parties. Essentially, it's sort of what we see in Europe with GDPR. I am the owner of my financial data. Of my data, and I should be able to use that data to access services, and so that's really what it boils down to. The challenge is that we have a fairly a bit of a unique banking situation in Canada with 6 major banks. Having those few banks decide on how to take their legacy systems and make them accessible to third parties is really why it's been such a long process.
Right. So do you think once open banking is instituted, will it benefit Canadians with subprime credit or those who are credit invisible?
No, well, not really, because as I said, nothing's really going to change dramatically. This isn't a revolution in open banking. Open banking is one of those words where it has a lot of baggage, and what does it really mean? People can hide behind that term. Open banking sounds so exciting, doesn't it? It's like everything's open. We're going to drive innovation and foster a sort of a new way of looking at data. But if the reality is that what we need to do in Canada is foster innovation. That really is going to benefit your non-prime or your credit invisible or your invisible prime, because it's on the intelligent use of that data that you can identify people who are the folk that will pay back a loan. It just so happens that they're on the bad side of some history, or they're going through a family crisis, or whatever the case is on the non-prime side. You want to identify intelligently what kind of borrower this person is, so that you can lend to them, because ultimately access to capital is a kind of an inalienable right for the consumer. So between now and the time that these formal APIs come out, certain banks have basically discontinued the free flow of data. So that's a big problem for a lot of Canadians. So there's an existential crisis going on right now in Canada. So that's now. So we've definitely taken a step back. Now to take a step forward to business as usual. So come January, 2023, maybe we get to the point where certain, fintechs are now integrating to these APIs, and then we're back to business as usual, where that person can walk in, who can't walk into a bank, can now get access to their data in order to provide the data to a fintech. But remember, between now and then, those fintechs are being squeezed between incumbent banks and the big tech companies that are coming into the market. They don't need open banking because they have data. So, shake a stick at a Leviathan. So Amazon, eBay, Shopify, and the list goes on, right? And those Leviathans are coming in and squeezing. And so all we're doing by not making a real stab at open banking and allowing for data to flow, not only in the way that in the old direction, which was from the bank to the fintechs, but create an ecosystem where data is fluid, and that as it has been in other regimes, like in UK, where there's a freer flow of data from the fintechs to the banks and from the banks to the fintechs. That kind of economy fosters innovation. And that's going to service the person who needs a loan, because it's going to be a much more intelligent data lake in order for them to access capital. And if we don't, we're just going to be squeezed by the larger entities, and we're going to lose our opportunity to drive fintech innovation in Canada, which would be a sad, sad loss.
Right. So you believe that come January 2023, whenever things are put in place, you think it'll be more of a return, bringing us up to where we should already be, rather than a major step forward for Canada?
Things are moving fairly fast. And so the fact that they weren't up to speed a few years ago, and that now we have a framework that's being, discussed, a Canadian-made framework, and we're part of FDX, the Financial Data Exchange that is working on these standards. I mean, we're as excited as anybody else to get things going, and I'm definitely not trying to in any way naysay what's going on. I just want it to happen, yes, so that we can get to open banking.
Right.
Yeah, I'll add a little bit, Kira. I agree with Gary. I'm a little bit more optimistic with what's going on, because from where we were 5 years ago, Plaid and Flinks are in the market. The data is available to certain providers. They are connecting with the banks. It wasn't always available. There's a bunch of some startups that have access to it. They're manipulating it well. They're providing good data back to the consumer, and it's benefiting them. It's allowing them to analyze their spend, and conjunction with some new credit features that are, the walls are coming down a little bit. But I agree with Gary. There's a long way to go, and especially compared to the UK, who jumped right in and took control so quickly, we definitely need to catch up. Yeah.
I mean, it's a little. I mean, you're absolutely right. It's good, and everything's relative in life. And hey, I couldn't be more happy with making a step in the right direction. The challenge that I face is as a borrower forward organization, and the CLA represents borrowers in the small business and the consumer sectors, and we try and foster an environment to give them access to capital when they need it, and to make sure that we can nurture them towards prime if they're in the non-prime sector. So the whole idea is, how do we get everybody to work together so we can benefit the borrower? So, if you put the borrower in the center of the world, then things change a lot. The bottom line is that things are changing. And again, the banks are in the center of the world, and at some point, somewhere, the consumer of the services that the bank offers will be at the center of this, framework, and they will be demanding things that are not on the truck right now.
Right. Yeah. So speaking of the banks, once the frameworks are in place, open banking is instituted, how do you think they'll have to adapt or change the way they're doing things?
Well, there has to be a two-way street. So right now, all they're doing is putting together a standardized API framework to allow for third parties to consume consumer and business data. So again, that's exactly what happens now with companies that scrape data based on consumer permission. So what has to happen is a two-way flow of data, or not even a two-way flow of data, which again sort of implies that there are two economies, one incumbent and one challenger. There isn't. There's a marketplace of solutions, and the banks are in there, and other folks are in there. They're all trying to service this borrower. And what has to happen in order to service that borrower is the data needs to move around in a free fashion, so that we can innovate around solutioning for that borrower. And if it's just a gateway to allow for data to one direction, you're just not going to get that innovation. Let's look at the UK economy. The biggest center of fintech on the globe. Why? Open banking. No other reason. It's because there are companies there like Revolut and others who could innovate around data. It's incumbent upon a country that wants to be next-gen banking to allow for the fuel for the next-gen banking vehicle to be out there and accessible. And fuel, as we know, is data.
There's no question about it, Gary. I think you just hit it on the head with the statement about data. And everyone knows whoever controls the data at the end of the day is going to win in the end with this new economy. I mean, Google knew it for a while. Amazon is right now in the cloud gathering everyone's data, and Facebook also jumped in. So banking data is very valuable. It's more valuable than I think people thought. There's sort of a parallel thing going on in the medical industry. People want to control their own medical records. Who controls that? Is it the consumer? Is it the doctor?
I just want to take the ambiguity out of this conversation. There is no discussion. The person that controls the data is the person who owns the data. The person who owns the data is the patient. The person who owns the data is the borrower. That's their data. We're a custodian of the data. As a bank, as a fintech lender, we're only a custodian of the data for the user while they're using those services. Maybe we can take some anonymized data and use that for credit modeling and things like that. But data is owned by the consumer, and we need that data to be free and flowing in order to service that consumer with the data that they own.
That's the whole question. Once everyone agrees the consumer owns the data, I think all the rules and API exchanges will reflect that, and the big banks and the other financial institutions will follow along. And I hope we're going there, but it sounds like we're in the right direction.
Yeah, no, absolutely. As I say, we're moving in the right direction, and that's a fantastic thing. I just don't want us to be too. I don't want there to be too much of this sort of paternal, we're looking after your data, so we can't let you get access to that data. So it's a little bit, at a certain point, you gotta let the little borrower grow up and become an adult and be able to take their data and use it. And that's what we need to get to. And these are small steps. And every adult has a hard time letting their little kid, become free and, become autonomous. I think we need to take that same journey with our borrowers.
Awesome.
Great. Well, thanks so much for joining us, Gary.
No, thanks a lot. And I really appreciate everything you guys do in the marketplace. And we're excited to have you as a member of the CLA and work with our community to service borrowers and to get them access to capital. So thank you so much.
Thanks for the kind words, Gary. We appreciate your time today.
Okay, bye-bye now.
Cheers.